'Twas the week before Christmas, and all through the markets, not a green bar to be seen, not even from Target. The economy is doing fine, as expounded by Jay Powell, but throughout the world investors let out a great howl. Hey everybody, it's Brian from Viable Traders here. It's December 23rd. Just going to go over the week that was, and as you can tell from my little Christmas eulogy, things were not looking pretty for people that were long the market. And we'll just take a look here at how things look in the internals. You'd like to look at those. You can see here we're approaching 90% of these stocks that are below their 200-day moving averages. That is pretty ugly, and sad commentary about what the market internals look like. 50, same thing. A lot of new lows, not many new highs, like about 2% of the market. Advanced decline, significant. So, nothing new here. We've got a really pretty strong bear market. Let's take a look at let's see how the groups are doing. You can see nothing is getting spared over the last week or so. Utilities down. Utilities, the good house in a bad neighborhood. Even it couldn't hold up, and even on a month it's down. 6 months, utilities are the only thing that's actually up. So again, nothing new here. Utilities are holding up, but they're everything's going to go down in this market, even the ones that have been holding up. So let's take a look at the SPY weekly. You can see here this was our level that we were looking at, and it broke down pretty significantly this week, down to 240, and closed right on the low of the day on volume, which doesn't bode well for the continued or any kind of a relief here, I would say, from selling. So what kind of levels are we looking at? I mean, we could be looking here at 232, this sort of level here, and then down here we're down around 220, and then the next stop could be around 200, and 190 could even be possible, but 230, here's your 200-day moving average. I would hope to see some support there and maybe a bounce, but again, I wouldn't be getting excited on any bounces going in too aggressively long, because these short-term bounces in a bear market can be pretty strong, and they can suck people in, and you don't want to be sucked in when the overall direction of the market is continuing to be lower. So let's look here at the daily again, sort of the same thing. We broke down, lost this level, and then five days, red bars, all down, all on increasing volume. So yeah, not very pretty for the bulls. I was just looking at a few charts here that are kind of interesting. The MU on the weekly, it's getting down to a pretty significant level of support here. 200-day moving average at 28.75. If we do get a bounce, this could be something that you might want to keep on your radar for a very short-term trade. Could bounce here, or at least a little bit lower, around 28.75, and that would coincide with sort of back in this area here. So what's been doing well? Let's just see. Let's take a look at GLD gold. Gold has actually been moving up here. You can see here we had a nice double bottom back in August, and then the second bottom in October, and then we made a higher low here beginning of November, and it's starting to come back up here, and there's certainly some levels of resistance here. We're kind of into one right now. This would be the next one, maybe around 123. And then obviously this top here, some major resistance at 128. But gold actually looks like, if you wanted to be long something, I would definitely be considering gold. And you can play GLD, or you can play NUGT, the gold miners, JNUG, which is the junior gold miners. Those all tend to move with the market, or with the gold market, although NUGT was down, I believe, on Friday, even though gold was up. everything was getting sold, even the miners when the gold prices were up. So something to keep in mind here. I've got a little bit of gold position right now. But what's been working here and what might continue to work if we continue to get a sell-off into January, FAS, which is the inverse ETF of the financials, it's been doing pretty well. Had a nice long consolidation pattern here, and now we're breaking out. So you can kind of see here we're at a level of possible resistance, which may indicate maybe we're going to get a bit of a relief rally going into this this Christmas week. So I'd be looking at pullbacks on this to actually add to a position if you were so inclined. And here's the daily. You see it's starting to creep up. All the moving averages are moving higher and all being done on volume here. You can see the volume really picking up here as we got into the latter part of the week. Another one, TZA, another ETF that's inverse to small caps. So when small caps go down, TZA goes up. So you can see it's been going up nicely here. Again, it's getting into a level of resistance here. So if you're going to enter that, I'd look for a pullback. And the weekly looks pretty much the same as FAZ. So look for, I wouldn't get involved here, but I would definitely look for a bit of a pullback maybe next week and hopefully be able to get involved in that. What's been working out well, the stock that I've taken a position in, I've mentioned in previous videos, SJB. This is again, it's an ETF. It's a high yield bonds ETF, and it's inverse. So when the yields on these bonds go up, the price of this goes up. And I've been expecting this, and this is a bit of a longer term play. Again, I talked about it before. It's really a play on some of these high yields bonds that are out there right now. The yields are going up because we seem to be heading into a bit of a slowdown, possible correction, and there's a lot of debt out there. And the concern is, obviously, if interest rates continue to go up, some of these companies that have taken on a lot of the debt may start defaulting, and which will drive the rates on these bonds up, and therefore SJB will go up. So that's what I'm in this for the long term, unless it I lose my position back around 23, which I think I got in at 23.10. So anyway, that's it for the recap. I hope everyone has a happy holiday, and we'll see everyone in the Bear Bull trading room in the morning. Reminder, Monday is a half day, so volume will probably be light, and the rest of the week volume will also likely be light as well, but we'll be in the room, day trading room trading at Bear Bull Traders. And if you're interested in grabbing my book, it's How to Swing Trade by Brian Pezim on Amazon. So everybody, enjoy the rest of your weekend, and we'll see you in the room tomorrow morning if you join us. And if not, have a great week, great holiday. Bye for now.